So where do we go from here? Jay Morelock is an economist from FTN Financials. He has been on this program many times talking about Greece. Did you think we would get to this point, Jay?
I did, actually. I do think this is the fundamental flaw in the construction of the euro from the get-go. It was just a matter of time, and here we are. So what started as an economic problem and a financial problem has now moved into the realm of politics and has really become a democratic problem. And so, yeah, I mean, really this is the sort of end game here in the euro.
Look, the criticism of having a single currency is that you can't have democracy without control over your own monetary policy. Is that what we're seeing here?
Absolutely, because at some point, and what we're seeing is really a tipping point in Greece, and the Achilles heel of democracy, some would say, is once over 50% of the population is no longer getting the benefits of being a part of the euro, they're going to vote their way out of it. And so what we've seen now, after years and years of austerity and an attempt to spur the economy, less people are benefiting from the joining with the euro than would benefit from getting out of it.
Okay, so where are we today right now? The Greeks had promised that they would have some sort of new plan. Look, they don't pay their debts, they don't pay their taxes, and they don't keep their promises when it comes to this. Does the government basically not have a clue as to how to move forward?
Trust is low. You're absolutely right. Time is moving very fast. I think the Greeks, the government, the Caesar government, was probably a little surprised at the overwhelming, over 61% voting no, and they've ushered in a new finance minister. Yeah. So he's, a part of his first meeting.
They gave the boot to Giannis. He got on his motorcycle and headed out of town, but not before some partying shots.
Absolutely. In Athens, photographed sipping some wine, taking some. He's yeah, exactly. So there are a lot of new things are happening right now. So I think they're getting this proposal together right now. And they're going to deliver it as soon as possible with their new finance minister, attempting to finagle away with this new backing from the public to say, look, well, we want to stay in the Eurozone, but we're done with austerity.
Yeah, the Greeks really delivered two messages. Their polls say that they want to stay in the Eurozone. The vote clearly was against austerity, but also was the vote against was it an anti-bullying message? I mean, the EU officials over the weekend, I don't think made their case any better by really telling the Greeks you had no choice. They were bullied. Right,
and they absolutely were. And as Sarah said in this in the segment, there's a lot of pride behind a lot of this. They don't want to be considered a debt colony. They don't want to live like this. They don't want to be under the rule of the Germans, especially financially. So the problem is,
and they have a long history. And that's playing a role here. People don't talk about it, but there's no question that's playing a role.
Sure, they have a long history and a very short history, too. Yeah. I mean, things have happened very recently that make this even more poignant. People who are actually still alive but remember a lot of this recent history, too. The problem is that the voters, in a way, want a contradiction. Okay. So they want to stay in the Eurozone, but they want to avoid austerity, and that just doesn't work.
Okay, so let's talk about the financial reality on the ground in Greece right now. The banks are running out of cash. But this is not a worldwide depression. It's not what we've seen in the 20s, for example. This is really an isolated to a country, and it's a depression of everyone's making, isn't it?
Absolutely. And really going back to the construction of the Eurozone, this really is, and the contagion that they allowed for in creating this monetary regime is that with a crisis in one is going to affect all. So what that was supposed to do was get everybody on the same page. Right. If we have a crisis in Mississippi, we act to do that.
Sort of a NATO pack of economies.
Right.
But that doesn't work.
It doesn't, especially when they all have independent voting blocks. So the concern now is that contagion concern, not necessarily monetarily. They can fix Greece monetarily. That's very easy. The 1% of the EU.
It's not a big bill.
It's the concern is that, well, if the program here is to elect a leftist government, come in, renegotiate your debt, get a haircut, and go back, and that benefits your country, well, Spain's right there, Portugal's right there, Italy's right there, France is right there. They'll all do the same thing.
There's one final question about the U.S. I flippantly said that when the investors realized that this isn't going to really affect them here. Is that accurate? I mean, we don't have a whole lot of exposure, including U.S. banks don't have a lot of exposure.
It doesn't affect us yet. And if they resolve this Greek conflict soon, it won't have an effect. The concern would be if Greece exits the euro and then the contagion effect slowly starts knocking dominoes over, eventually those dominoes start to hit onshore.
Okay, Jay, stay right there because when we come back, we'll talk to Jay about oil. And later, Frank Uciardo is here with how the UN is an economic force. You're watching Arise Xchange. Oil prices recovered a bit after Monday's sell-off. In fact, oil is down about 15% over the last couple of weeks. Jay Morelock of FTN Financials joins us once again to talk now about oil. Jay, we like when oil prices come down, for one thing, when we drive our cars, but it is a sign of some problems on the economy. Why are we seeing a sell-off right now? And this sell-off, we have to remember, follows almost a 50% sell-off we've had over the past year.
Right, and it really it throws a little bit of wind into the recovery story of, this was a temporary dip. We're going to recover back up to the, $70, $80 a barrel, where we can actually see a lot more productivity, especially in the shale basin. Uncertainty and oil prices and demand are negatively correlated. So as we see uncertainty rising, which we definitely see in the Eurozone right now, we're actually starting to get pieces from China right now, too, adding to this uncertainty.
About their economy slowing, their stock market coming down.
Exactly. Yeah, their stock market's down in the past 3 weeks, almost 30%.
Right.
So when that happens, uncertainty is going up. So this isn't catastrophic. It's just one of those when you start wondering, okay, well, what's going to happen with Greece now? Could that go to Portugal? The Eurozone, people put their hands back in their pockets. They start saving their money. They're not as free with it. And so
and so far, OPEC has said the supply will keep going. And now there's concern that if Iran comes back into the countries that we import oil from, that's going to increase the supply as well.
Exactly. More uncertainty. What's going to happen in these negotiations? Could Iran be back on the table? And like you said before, if Iran comes back on, that's increased supply. So that's going to bring the price down again. So we have really three major factors right now playing in, not only adding to the uncertainty, but all three pointing to lower oil prices.
If you're invested in energy companies here in the U.S., have we started to see a significant cutback in production?
We actually haven't. Production's at all-time highs. The concern is that a lot of these shale players have been
and this is fracking we're talking about.
Yep, the fracking, the natural gas players, mainly in the shale basin in North Dakota and Texas, they have been supported a lot by their derivatives. So what they've done is they hedged oil prices out for 6 months to a year. So what they do, which is the smart way to run your business, so you can keep solid sales throughout. We're starting to hit that point now where if we didn't see an oil recovery, we may see a bigger pull back in production. But these frackers, I mean, they handle their business well, and production, we think, is going to continue.
Yeah, but they need a number above $50 a barrel, don't they? Maybe $60 a barrel, or they're not going to continue fracking.
And there's, it's really a scale. So a majority of them can produce at 60, but really we need $80 a barrel oil to keep everyone in the industry pumping to where it was before this price.
From a consumer standpoint, oil prices coming down as a tax rebate, if you will, right? Are we going to see consumer spending, do you think, pick up because of this? Are prices going to continue to fall at the pump when they traditionally go up in the summer?
We didn't see this happen before. So, a lot of economists were calling during the 50% decline in gas prices, we're going to see burgeoning consumer spending. What we've actually seen is consumers are using this extra money to pay off some debts, to increase their savings. This, again, in this time of uncertainty, it isn't just, I'm going to save $1 here and spend it
And
here.
we have to remember one more question. We have to remember the impact this has on oil-producing countries like Africa, continents like Africa and countries in Africa that have seen their currencies significantly come down because of oil prices.
And a lot of these currencies are almost pegged to the price of oil. So it's really good for these economies to have high oil prices.
In Nigeria, for example, we've seen a collapse in the Naira over this.
And Nigeria, really the biggest and best example as the biggest oil producer there. Their economy, really, it's so many knockoff effects from higher oil prices that really does spur those economies. So we really don't like to see the oil prices, especially when it comes to the African economies.
Jay Morelock doing double duty for us today.
Anytime.
Thank you.
Thanks, Andrew.
Appreciate it. See you soon.